I mean, some of the early indications show that all in all, it was a pretty strong season, but we know that not everybody won. So who, if you were to have to parse them out, who were the winners, who were the losers?
Hi, Courtney. Happy New Year. Yes, we saw those numbers. The government numbers have been incredibly strong, almost 6% year over year for retail sales. And even, department stores were a little bit better in November, decelerated slightly in December. But across the board, the consumer's feeling good. The tax impact is certainly having a feel-good help. Saving rates are at their lowest in a decade here. But, don't forget, everything is not all roses into 2018 because there is still deflation out there. There's still deflation in apparel, and there's even deflation in categories like beauty. So there's still margin pressure out there. So into 2018, you want to be careful with this recent 20% in the retail index.
And I think that's a really interesting point when we talk about margins. When you look at everything that consumers want, they want free shipping, they want fast shipping. We're talking a lot about same-day delivery. That is not inexpensive to deliver if you're a retailer. So if you are an investor in retail, what should you be expecting when you're looking at margins? If you are hitting on all cylinders with consumers, that's going to come at a cost if you're a retailer.
It sure is, Courtney, and you and I have talked about over years, years ago was all about free shipping, and that hurt margins. It's not just about free shipping anymore. Now it's about free returns, it's about click and collect, and it's about even same-day delivery. You look at Macy's and Walmart and Target, they're all looking and going into same-day delivery. That comes at a very big cost to margins. And in addition, as you've talked a lot about, the shift to online is just a lower margin business. So there are certain categories, particularly apparel out there, and particularly the teen space potentially, that will still be under a lot of pressure in 2018.
Stacey, talk to us about Walmart, which obviously had a strong year. Can it repeat that strong year? And what can we learn from what they've been through for other stocks that are sort of in a similar position?
Walmart has done an incredible job. They've actually, in the past year and a half, become a real competitor to Amazon, and the stock is trading at 21 times here and certainly reflects that. What I'm really looking at is Target. I mean, Target has entered the investment phase that really is very reminiscent of what Walmart did 2 years ago. So, they're trading at a mid-teen multiple. And, if they can sort of get their act together and execute on click and collect, I would point out that they were the latest available for click and collect the day before Christmas, and that's a big deal. If they can execute and get that traffic in the store to return items or pick up online items and convert the customer to buy other things and manage their store labor well, I think they're a huge winner and potentially the next Walmart.
Stacey, if we can talk a little bit about stocks going into 2018. Now, actually, here we sit in 2018. Consumer discretionary saw the best quarter this past quarter since 2013. We know a lot of those stocks were under pressure, and they saw a decent run up. So what do you think? Are we fairly valued now, or what would you caution investors if they're looking at buying some retail stocks at this point?
We've seen this 20% run since the Q3 less bad earnings numbers here. And a lot of that, as I said, is the feel-good tax impact. But you have to acknowledge that the numbers out there have been a lot better. But I think as you go into 2018, you still want to be cautious on department stores. They've had a nice run here. Even if you look at sort of like a Nordstrom, even the rack, has been decelerating. That's a higher real estate cost division there, so you have to watch out. And I think, but then again, you look at stocks like a Lululemon that's had this massive run, but what are they doing? They're reaching out to the slightly larger size consumer. They're updating their systems, so now they remember when you walk in the store what you bought last time and what size you are. Companies like that are doing real things to make a difference in their business, I think you can still own here.